Gold has crossed the unimaginable $4,000 an ounce. Some call it a bubble, others the final warning before the global financial order cracks. But this surge isn't just another rally. It's a message, written in the oldest form of money humanity has ever trusted. To understand why gold exploded, we must trace the fractures hidden beneath today's financial system. For decades, the US dollar dominated everything: trade, commodities, reserves. But dominance is not immortality. Three forces collided: inflation that refuses to die, a Federal Reserve cornered by slow growth, and nations quietly preparing for a world beyond the dollar. It began subtly, central banks buying record levels of gold, not for profit but for escape. China accumulated silently. Russia accelerated openly. India, Turkey, and the Gulf followed, a quiet revolution in reserve strategy. Then came the trigger: bond markets flashing red as U.S. debt costs spiraled. Investors fled toward the only asset that has survived every empire's collapse: gold. But this new rally wasn't speculative. It was defensive, bordering on desperate. The dollar's weakness amplified the rush. A currency that once radiated power now showed vulnerability. Softening rate policy from the Federal Reserve only fueled the fire. Lower rates, weaker dollar, stronger gold. Yet the question remains: is this a bubble or a signal of structural change? Let's dissect the forces, economic, political, and psychological, that pushed gold beyond $4,000. Force 1: the erosion of trust in fiat money. Inflation beat expectations for 20 consecutive months. Households lost purchasing power. Confidence cracked. No government can print gold. That truth became magnetic. Force 2: geopolitical realignment reshaped reserve strategy. Trade wars, sanctions, and currency conflicts pushed nations to seek neutrality. Gold became the one asset immune to political pressure. Force 3: a global system drowning in debt and losing the ability to pretend the math still works. World debt hit $330 trillion. Interest payments crossed breaking point. Something had to give, and the first crack appeared in the dollar. For decades, America exported inflation, but now the world pushed it back. Foreign buyers stepped away from U.S. treasuries, the most dangerous silence in financial history. When demand died, yields spiked, and when yields spiked, gold soared. But the rise wasn't linear. It was a scream from a system running out of oxygen. The Federal Reserve faced an impossible choice: defend the dollar or save the economy. They chose survival, and that decision detonated the gold market. Lower rates killed confidence. Cheap money revived inflation, and gold, ancient, silent, patient, became the ultimate refuge. But the truth is darker. This wasn't a rally. It was an escape. Escape from a dollar entering its twilight. A currency once feared, now questioned. You see, empires don't fall when they're weak. They fall when the world stops believing in them. For the first time in modern history, faith in the dollar fractured simultaneously across markets, nations, and households. When faith dies, fiat dies. And when fiat dies, gold awakens. This was not speculation. It was recognition that the world's reserve currency may have reached its final chapter. The signs were everywhere: collapsing savings rates, shrinking foreign reserves, and the rise of parallel financial blocks. BRICS didn't need to overthrow the dollar. They only needed to ignore it. And they did brutally fast. Oil contracts settled in yuan. Energy trades collateralized with gold. The petrodollar agreement quietly abandoned. And with every transaction that bypassed the dollar, gold gained another heartbeat. Gold was no longer a commodity. It had become a message, a warning signal flashing across the global economy. A message that debt can't rise forever, that printing isn't free, that confidence once lost rarely returns. And while investors argued about bubbles, something far more dangerous moved beneath the surface. The U.S. banking system began showing stress fractures again. Regional banks reported liquidity shortages. Commercial real estate defaulted. Shadow debt shadows grew. Each shock pushed gold higher, not gradually but violently. Investors didn't chase the rally. They clung to it. the way sailors cling to wood after a shipwreck. Then came the event no one expected. The global swap lines tightened, liquidity vanished. Countries that depended on dollar flow suddenly faced shortages. Dollar scarcity led to dollar rejection. And in that vacuum, gold became the fallback collateral of the world. But the real explosion came when institutional funds capitulated. They didn't buy gradually. They bought in panic, in bulk, at any price. Gold broke $3,000, then $3,500. Then, almost violently, it touched $4,000. But here's the truth. The number didn't matter. It was what the number represented. A silent global vote of no confidence. Not in markets, not in banks, but in the very architecture of modern money. And as gold rose, the dollar faced its darkest moment, the death of belief. The decline wasn't loud. It wasn't sudden. It was quiet like a candle burning out. Currencies do not collapse when numbers fall. They collapse when trust falls. And in a world drowning in uncertainty, gold wasn't just rising, it was reclaiming the throne. This isn't the end of the dollar, but it may be the beginning of the end of dollar supremacy. But the rise of gold is only half the story. The other half is the slow unraveling of a financial empire built on borrowed time. You cannot print trust. You cannot legislate confidence. And once they vanish, everything else becomes fragile. Households felt it first, rising prices, shrinking savings, wages that couldn't catch up. Then small businesses squeezed by credit, crushed by debt, abandoned by lenders unwilling to take risk. Next came the corporations, giants with feet of sand, sitting on mountains of debt that suddenly weren't cheap anymore. Interest wasn't just a number anymore. It became a weapon, carving through balance sheets with merciless precision. And through it all, gold didn't move. It absorbed the chaos. But the final trigger wasn't inflation, and it wasn't interest rates. It was trust in the global order itself. Alliances shifted, trade blocs hardened. Nations no longer acted together, they acted alone. And in this fractured world, gold became the one anchor everyone agreed on. Not out of unity, but out of fear. Fear that debt could no longer be rolled. Fear that currencies could no longer hold. Fear that the global system itself could no longer endure. And when enough fear gathers in one place, it becomes a stampede. Retail investors joined in, not out of speculation, but out of desperation. Premiums exploded, supply evaporated, coin shops were wiped out in days. ETFs saw record inflows, vaults ran out of allocated space. Miners couldn't keep up. Then the media finally said the words no one wanted to hear. Is this the beginning of a currency reset? The question wasn't crazy. For the first time in decades, major powers discussed alternatives openly. Whispers of a gold-linked settlement system, a multi-currency reserve basket, a world where the dollar no longer reigns alone. And if that world emerges, gold at $4,000 may be just the prologue. Because when a reserve currency weakens, the world doesn't pause, it adapts. And adaptation is rarely gentle. Trade contracts adjust, payment systems evolve, central banks hedge against the unthinkable. The global machine starts rewriting itself. Households feel it as higher prices, governments feel it as pressure, markets feel it as uncertainty, but gold feels nothing. Because gold does not care about politics. Gold does not care about promises. Gold cares only about truth. And the truth is simple. The world has printed more risk than it can ever repay. Gold is the counterweight to that delusion. As confidence fractures, gold doesn't rise because it becomes stronger. Gold rises because everything else becomes weaker. But the most chilling truth is this. Gold at $4,000 isn't the crisis. Gold at $4,000 is the symptom of the crisis. The crisis is trust, or rather, the disappearance of it. A disappearance that spreads faster than inflation, deeper than debt, and more violently than any market correction. So the question is whether gold can go higher. The question is whether the system can stabilize before it breaks. Because once belief dies, it doesn't return. And in the vacuum left behind, only one asset has stood the test of every empire, every collapse, every reset. Gold, the ancient king, the final refuge, the last truth.